I'm Tim Hasara, founder and CIO of Sinnet Capital. I started Sinnet after spending 27 years managing microcap portfolios at Kennedy Capital Management in St. Louis. By the time I left in 2021, I was overseeing more than $1 billion in microcap assets. One of the things I came to believe over time was that scale can become a real problem in microcap investing. When you're managing very large pools of capital, it becomes harder to build meaningful positions in smaller companies without affecting liquidity or owning too much of the business. You naturally end up with more positions, more diversification, and in some ways, a portfolio that starts looking more like the benchmark. So the idea behind Sinnet was pretty simple. I wanted to get back to running a portfolio built on our highest conviction ideas. I've spent most of my career in microcaps because I still think it's one of the most inefficient areas of the public markets. A lot of these companies in microcap have very little analyst coverage. Some have no coverage at all, an area we like to focus on. In addition, institutional ownership can be limited. They're often too small for larger firms to spend much time on, which means if you're willing to do deep fundamental research, there's still opportunities to find businesses trading below what they're worth. That's always been the core philosophy behind our process. We're generally looking for companies where the private market value of the business is much higher than where the stock is publicly trading today. Then we try to identify what could cause that gap to close over time in the form of catalyst. Sometimes it's a new management team. Sometimes it's a change in strategic direction. Could be asset sales or simply a company executing better than investors expected. But we're not just buying cheap companies. There must be some reason value can eventually be recognized. One thing I've learned over the years is that management matters a lot in microcaps. Incentives matter, execution matters, capital allocation matters. In smaller companies, leadership teams can have an outsized impact on outcomes, both positive and negative. So we spend a lot of time trying to understand people running the businesses, not just the numbers. We use data screening tools, automation, and AI-assisted research to help process information faster and cover a broader universe of companies that would not have been possible years ago with a smaller investment team. That doesn't replace investment judgment. It just allows us to spend more time focusing on the things that matter most. The core of investing really hasn't changed. It still comes down to understanding the businesses, evaluating management, understanding incentives, and trying to value companies correctly. Our approach has always been long-term and research-driven. We know microcaps can be volatile, and there will absolutely be periods where this part of the market falls out of favor. But over long periods of time, we continue to believe inefficiencies exist here that disciplined investors can take advantage of. We've invested in various market environments, from the internet bubble, the financial crisis, raising rates, lowering rates, and have navigated through these environments, which all have created great inefficiencies, but also tremendous opportunities. I believe today we're probably in a period of irrational exuberance that will create excellent long-term investment opportunities. That's why Sinnet exists. We wanted to build a firm focused specifically on this part of the market while maintaining the flexibility, concentration, and capacity discipline that we think are necessary to invest in microcaps in the right way. Thanks for taking the time to learn more about Sinnet Capital. We appreciate your interest and look forward to continuing the conversation.